Good afternoon, and welcome to the Webull Corporate Connect Financial Technology webinar. Today, we will be hearing from three Corporate Connect participating companies. First, we will hear from the CEO of Janover Inc., Blake Janover. Then we will hear from the CEO of Oh My Home, Rhonda Wong, followed by a pre-recorded presentation from Hajime Sugino, the Executive Officer and Head of Sila Technologies US. All three will present for approximately 15 minutes, and then time permitting, there'll be a brief Q&A session. Please submit your questions on Zoom through the Q&A portal. The last pre-recorded presentation will not have a Q&A session. But first, please note that Webull was not involved in the preparation of any of the presentation materials, and this is not a research recommendation, solicitation, or endorsement of any kind. No investor should rely solely on the information provided in making a decision to invest. Okay, now on to the webinar presentations. First, we will hear from Janover. Janover is a B2B fintech marketplace connecting commercial property borrowers and lenders with a human touch, seeking to revolutionize the commercial real estate and lending market by making it hyper-efficient, transparent, and accessible to all rather than the few. Its online platform connects commercial mortgage borrowers looking for capital to refinance, build, or purchase commercial properties. And now I'll turn it over to Blake. Blake, you can share your screen now.
Thank you very much. Let's see if this shares well. Are you able to see my my screen?
Yep, looks great.
Excellent. So Webull, thank you very much for the introduction and for hosting me. Well, I guess all of us today appreciate it. I think you did a good job explaining it, but I'll put a little more detail into it. So Janover is the AI-enabled fintech platform for commercial transactions. It's a multi-trillion-dollar market, and our primary focus started with commercial real estate, specifically commercial real estate loans. Now, I lead with the fact that we're reporting quarterly but building for long term, because I think we're atypical for a public company in the capacity that I put my name on the door. Janover, Blake Janover is my last name. I'm the chairman and the CEO. I own more than 58% of the stock personally, and I view this as a long-term instrument and value creator for my family and for all of my shareholders. High level, just some quick touch points. Since inception, we've taken more than $200 billion in commercial loan applications, almost entirely through organic traffic and SEO. So pretty much unpaid, all inbound. We had more than 88 million impressions on Google over the last 12 months. We've taken nearly we've closed nearly $750 million in loan transactions. Nearly 10% of the banks in America are represented on our platform. So as a reminder, our primary product is a two-sided marketplace for commercial mortgages. So on one side, we have banks, credit unions, institutional lenders, and on the other side, we have commercial real estate. And I always say commercial, actually very little of it's office. It's mostly multifamily, industrial, retail, but we have these owner operators and developers, these multifamily commercial real estate entrepreneurs that are looking for financing. And we're a matchmaker. We take a little fee every time somebody transacts on our platform. We've had more than 100,000 folks come through and apply for financing, more than 4 million all-time users. And our AI, which is an application of generative AI, is what I believe to be one of the most advanced applications I've ever seen in the context of enterprise communications. And I'll talk a little bit about it. I don't want to make it sound too fancy. I kind of want to keep this simple. So very briefly, when I think about strategy is really cool, but it's all about the people that are executing on the strategy. I personally have been involved in billions of dollars of residential, multifamily, commercial real estate transactions over the course of my career. I've owned and operated a lender. I've both residential and commercial. I've run title and real estate operations in a full suite of residential and commercial real estate services. I've operated one of the larger BPO operations in the Americas. I'm a Harvard Business School alumnus. I sit on a couple boards. I'm I've been an entrepreneur for my whole life, specifically at this intersection of real estate and technology. Bruce Rosenblum is our CFO. We just hired him. He was formerly the CFO of PetMeds. When he started there, he joined when they were a 25-cent stock on the pink sheets. And 16 years later, when that was burning money. And 16 years later, when he left, I think they were trading at $50-something a share on the NASDAQ, doing maybe $275 million a year of revenue. And they'd returned more than $300 million to shareholders. So those are the kind of people that I prefer to surround myself with. Folks that have been there and done that to execute on strategy. Now, for our primary business, which is this senior debt or loans for commercial real estate, the market's huge. Even if the market shrinks, the market's huge. There's $4.5 trillion of loans outstanding. We've done less than $1 billion. There's so much to go. And our fee structure on that business is about 1% per transaction that comes through our platform. In 2022, there were more than $800 billion in loan transactions. That's an $8 billion a year market for us to grab. If that market shrinks by 50%, it's a $4 billion a year market for us to grab. So we're at the very, very earliest innings in this business. Like I said, we're a two-sided marketplace for commercial mortgages. Think about it like a matchmaker or a super sophisticated Tinder for commercial loans. And the problem is that, very simply, is that when you get a loan for your house, all of these loans are very similar. This is the LTV or the leverage. This is the debt to income ratio. This is the rate. This is the term. For apartment building loans, industrial, retail, self-storage, there's a lot of intricacies. Every bank has a different product. Every banker that works at every bank has a different product. So we're building something like Etsy, where every bank is kind of a unique seller, a unique craftsman, and we're organizing all of them into one place to make it really easy for them to connect with the right borrowers, the right commercial real estate entrepreneurs. Now's been a really exciting time to be in the business. So one might think there's a lot of pressure in commercial real estate or interest rate sensitivity. And you would be right. But what we found is that we've seen in parts of our business a lot more demand because we're a marketplace and we're neutral. So we're not making loans, we're not carrying risk, we don't have defaults. But a borrower or a lender can join our platform for free and see all their optionality in one place. And that's given us a bit of an unfair advantage because we have this fantastic funnel or SEO that I talked to you about a little bit earlier. Borrowers are kind of pouring in for free because of our education first approach about kind of unveiling the inner workings of commercial real estate finance. This creates a cost advantage for us, and ultimately we ought to benefit from network effects. And very simply, I think I would say that network effects in the context of our business is every commercial real estate owner or operator that joins our platform makes it more valuable for lenders. So more lenders join our platform, and that makes it more valuable for borrowers and owners because there's more options on the lender side. And this is a bit of a virtuous cycle. I've shared kind of the scope of the inbound that we have, and I'll wrap this up in a second and answer some questions because I have a lot of questions here, and some of them are really good, so I'm excited. So we have a lot of individual websites like multifamily.loans. That's .loans, not .com or .net. CMBS.loans, commercial real estate.loans, SBA 7A.loans. So it's an exciting opportunity to continue to build these web assets. And since we've started, we've been growing the lenders that we close loans with on our platform in an 80% CAGR since inception, an 80% compound annual growth rate. I'll talk about our AI in a little bit, but we pretty much have 24/7, 365 AI in chat, over the phone, text, and in email, working with banks and borrowers to create better outcomes. As we scale, we're going to continue to hire all-stars like Bruce, develop new partnerships to create new inbound business, and continue to look for exciting opportunities in the M&A space since prop tech investment is down according to some sources, 77% year over year, which is an exciting time for us to be opportunistic. So right now, our core product is commercial mortgages, but as we grow, we've introduced enterprise SaaS to our platform. As we move towards more of a subscription-based business, we could introduce other products like commercial insurance and beyond, as we start providing all these tech-enabled financial services for commercial real estate entrepreneurs and SMBs. And on the lender side, we started recently piloting the licensing of our AI to lenders. We have the opportunity to do loan participations, and we've made a partnership to help lenders buy and sell loans that they want to take off their platform. Again, most of our business has been driven by SEO, and as we scale, we're going to start to introduce partnerships like with La Rosa Realty, which is a new commercial partnership we entered, where they have 100 commercial real estate brokers, and now we have an arrangement where we're going to provide the financing for their buyers. So I'll stop there for a second and run through some of these questions. Michael asks, in light of the Groundbreaker acquisition, can you give more color on what subscription services look like for the company? To me, migrating towards subscription services and recurring revenue, high gross margin recurring revenue, is a really important part of the next year for us and going forward, as we kind of move from primarily transactional to more recurring and subscription-based. Groundbreaker is also super exciting because their core customer is the same core customer as our commercial real estate finance business, and our commercial real estate funnel and all of these million commercial real estate entrepreneurs a year that come through our website. A lot of these are the core customer for Groundbreaker. So we're starting this process. I think this acquisition only closed a few weeks ago, of feeding business back and forth, but it's a core part of our thought process, high gross margin recurring revenue. Thank you, Michael. Natalia asks, does Janover have a low float? Well, it depends what you would consider a low float. I think we have less. I think we have like 3.8 million shares outstanding, approximately, give or take. I can't say how many of them are held in transfer agent versus out there. But I think in the context of this market, that's pretty low relative to a lot of other companies. And there's virtually no debt, virtually no warrants, except for the underwriter warrants from the IPO. Very, very clean capital structure. And of course, I own 58%. And at the opportunities I've had since the IPO that I've been outside of my blackout periods, I've been buying stock, as have many of my board members and our CFO. Michael asks for an update on our buyback implemented in November. I think I can't report on that except for in our K or Q, but we did implement a buyback because it was our contention that I'm not sure if I could say this, but I think we were feeling like our stock looked like a really, really fantastic investment, and as an allocator of capital, we can't just look at outside investment opportunities. We have to look at what we think our company is worth versus what the stock is trading at, and we made the decision to authorize us and the board made the decision to authorize $1 million buyback. Just reading through some other questions. Frank asks, as it relates to SEO, how do you think about the risk of generative AI in Google search pushing down organic search results? Frank, we just got a deal yesterday through generative AI. So I think because we're an authority on essentially on Google, I guess generative AI is looking at us for information, and they're actually attributing stuff back to us. So that was very interesting to see. So as an authority on information, we think we're going to benefit from generative AI. And also, we're continuing to build out new partnerships with commercial real estate brokerages and being the get financing button on platforms in the future. So yeah. And last question, because I think we're coming up on time, is can we license our AI? We we are starting the process of licensing it, starting with very small modules, but it could go kind of to any industry. We're focused on banking and commercial real estate right now, but I do see what we've built as pretty scalable into any part of SMB finance, SMBs, and commercial real estate. So I think that's my time. That was 15 minutes. Webull, I can pass it back to you.
Great.